Did you hear anything in the budget yesterday, Ridham, or any indication of anything that would really push earnings growth going over the next few quarters? Because whichever way you cut it, we came out of a really poor earnings season gone by. Did you hear enough to see that earnings will start improving dramatically?
No, not specifically from the budget. What I'll say is the budget did not mar growth prospects. Because actually, if you look at it, the finance minister has held expenditure to GDP at constant levels over what will be a slightly depressed F13. So he's taking all the pain in the last quarter of this calendar year, which I think is one of the factors that may have led to the market sell-off yesterday, which is that the market suddenly realized that the GDP print in the immediate quarter may continue to look quite bad. So I think that may have been one of the reasons that may have affected stock prices yesterday. But I think things actually will improve a little bit in F14 because the base effect kicks in. And there is not such a big expenditure cut. Actually, he's relying more on revenues to curtail his fiscal deficit. I'm actually slightly disappointed that he did not aggressively use tax instruments to boost financial savings. Financial savings are sub 8%. They are at a 20-year low. I mean, we've gone back to 1990, pre-economic reforms. It's a big fall in financial savings, and we need to do something urgently to boost them. Now, they will go up when returns rise and when real rates rise. But you have the option of using tax instruments to boost returns by saying things like, let's exempt bank interest income for a year from tax and incentivize investors to put money into bank deposits over gold. So the absence of that was a little disappointing. I was expecting more aggression there. But aside from that, I don't think there was any direct thing in the budget to hurt or help earnings. Earnings will be helped as real rates stabilize, and which is going to be led by fiscal consolidation and a decline in the CAD. I expect the current account deficit to decline faster than the fiscal deficit, which will be good for earnings. And nominal GDP growth will be in the low teens, and therefore I think earnings growth, which have been hovering around 7-8% for the broad market, will probably accelerate to the late teens in the next 12 months. So I actually remain quite optimistic on earnings relative to where the street is right now. So I think the earnings environment is unchanged after yesterday's event, but the earnings environment is certainly looking a lot better than what it was, say, 6 months ago.
I want to pick on one thing that you said, Ridham, on this expenditure cut for FY14. Because 13. No, I'm talking about FY14, the absence of expenditure cuts in FY14. Okay. How would the RBI look at that? Because that's not great quality in reaching 4.8%, because he's assuming higher tax revenues, which he'll probably fall short on, and he's underprovided on many of the subsidies and got to 4.8%. But his expenditure targets are fairly large for FY14. Is that the kind of quality you need to see, or the central bank wants to see, in getting to a better fiscal deficit number?
No, then there are two things here. See, the adjustment in the expenditure has happened this financial year. So you have to keep a note of that. The RBI has not responded to that. So he has taken a big hit on expenditure this year. So he has made that one adjustment. He's not making a further adjustment next year. But crucially for next year is the change in mix of spending. I mean, he's taking subsidies down as a percentage of GDP, if I recall correctly, by almost 60 basis points. And he's increasing planned expenditure by 30 basis points, albeit from a very low level. But that mix change is, I think, crucial. So your point is absolutely valid, that there is no further deceleration in expenditure as a percentage of GDP in F14. We have taken the hit in F13, but there is certainly a mix change that is being budgeted for F14, and that is crucial because that mix change will have implications on inflation, which is arguably having a higher subsidy fuels more inflation rather than incurring planned expenditure. So I think that mix change is important. But yes, these are changes at the margin. They're not dramatic. I think it would have not been fair to expect a dramatic shift or a very big risk-taking budget, given that after all it is going to be an election year. So I think the changes were going to be more nuanced, and I think those changes are there in the budget.
A lot of the expenditure has gone courtesy or towards the social welfare schemes though, Ridham. Narega's got 30% more in the budget going ahead. I didn't hear that much about infra spend. What do you take away from that for the infrastructure sector, especially given what we've seen in earnings season gone by?
Actually, Mithali, if you look at the total numbers, so Narega is one part of rural spending or social spending, and you add up all the other categories, Last year they will finish at 52 basis points of GDP. For next year it's budgeted at 65 basis points. So it's not a very big change. It's about a 10 basis point change as a percentage of GDP. It's not being lifted dramatically. The year-on-year growth numbers look overstated because you have actually hit the numbers this year. So I'm not focusing so much on that. I'm looking at their share in GDP. Non-social spending is also going up by a similar amount. So he has increased the spending in proportion on both sides. So it's not that he's focused on any one particular area. So I don't think there is further impetus to rural spending, which by the way has been at high points and should have stopped rising, which is certainly the case with this budget.
Do you think by the middle of FY14, given that earnings are still on a weak kind of trajectory and therefore tax collections may as well, he will figure out that he's not getting to 4.8% quite so easily and again have to slam the brakes as he did in Q3 and Q4 FY13 to get to that number so that rating agencies don't breathe down his neck?
Or Udyan, look at it slightly differently. I mean, they have been more aggressive with asset sales. So if the markets open up a window, which surely they will at some point in time. I mean, we're not going to be in this depressed sentiment all year. And the government is opportunistic enough as they were in January, February. I mean, looking back on Jan, Feb, you can certainly say that the government used inflows very well to fund their deficit. I think they can do it again. So it doesn't necessarily have to hit expenditure. I think it's unlikely to hit expenditure because by the time you realize, if at all, revenues are going to trail your expectations, I think it will be quite late in the year. At a point in time when elections will be upon you, and it will just not be politically feasible for a big expenditure cut. So I think they will have to be prepared for this, and they will have to raise revenues whenever the markets offer them a chance. And there's room there. The total budget on asset sales is 54,000 crores, but I see room to do a lot more if the markets are conducive. So to that extent, you can expect that the government will keep up the supply at higher levels of the index.
What's the global context for this year, Ridham? The start has been a bit rocky. There seems to be incrementally bad news coming in from Europe, and the expectation was that the second half would see some recovery in global markets and maybe that would keep us stable. How do you think global markets have been moving?
Our global guys call this a period of great monetary easing, and we are entering into the third cycle of this great monetary easing. We have seen 2 cycles already. So all this bad news actually translates into more monetary easing. Sure. So in fact it turns out more positive for the markets than it looks on the face of it. So in case you get some volatility in Europe, you get some untoward incident in Europe, it's likely to lead to greater easing. So I think the liquidity environment in the world will remain constructive for India, and therefore I think the outlook for flows will remain good, so far as we don't do anything nasty out here, which I don't think is likely to be the case. So if we are going to keep our story intact, I think the flows will continue to come in.
Good speaking to you, Ridham, as always. Thank you very much for your time.